we have Netflix reporting after the market closes tomorrow in comms land. Last week before our themes call, we moved Netflix from the short bench to our number one active short. The main point here is that the download data is telling us that we're seeing an earlier than expected slowdown in gross subscriber acquisition, which is likely the result of accelerated password crackdown in 2023. We're hitting the anniversary of that password crackdown here in the next few months in April and May. But this makes us think that the 2024 paid net sub ads of 17.1 million globally needs to come down, at least in the first half of 24. And as Andrew says, we've been trying to manage Netflix tactically over the past year. And we moved it to the short bench last year. We saw upside to like $480, $500 in the stock price in a bullish scenario. It's currently trading at 483, so we're kind of right in that window there. The stock has appreciated 35% over the last year, and we think there's a big expectations gap here now between where we're at and where the street's at with decelerating momentum and gross subscriber net ads due to the password sharing crackdown. And really, the bottom line here is that the street's gotten incrementally more bullish on the stock, and we think it's pretty much tapped out on the high end.
How big of a problem is their lack of new content or compelling content? Is there any way to quantify that? It's so stale.
Yeah, so we track their originals, what they produce in house, and what they release. The content slate, I wouldn't say it's terrible. It's definitely not great. They don't have anything huge like a Stranger Things or Squid Game coming out in the future, but they're still producing a lot of original content, a lot of stuff to watch. I will say that what has really driven them over the past couple of quarters have been shows that they've licensed. So not shows that they created in-house, but shows like Suits or Young Sheldon, which are driving billions of viewer hours or viewer minutes rather on the platform. And if you think back to before they really pushed into original content, 5 years ago or so, licensing shows was what they really did, and they're kind of returning to that model where they're spending a lot of money acquiring these shows, and it's paying off. It's driving a lot of viewer hours, but the main issue here is that the password crackdown is creating what we think is an expected slowdown in gross subscriber net ads, and churn's getting higher as people don't want to pay for their own accounts anymore.
Yeah. And then, of course, there's the competition on original content at Apple and otherwise it just keeps coming.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.